Did you know the wealthy do not rely on 401k for retirements? Not for wealth building. They don't rely on it for a legacy, not for stability. And it's not because they don't need to. It's because they understand the math and the tax code differently. Okay? So the Bible teaches that wisdom is more valuable than gold. So today I want to give you the wisdom most people never receive. In fact, most Americans were handed one script: get a job, put your money in a 401k and retire at 65. That script was designed for workers, not wealth builders, not for you. Wealthy families don't follow that script. They understand the system behind the script. So yes, some use 401ks, but they do not depend on them. And here's why. Let's talk about the math. Because guess what? Numbers don't lie. So when you put money into a 401k, you're not just saving. You're not savings. You're growing a tax liability. You're not saving, right? You're deferring taxes into an unknown future. You're giving the IRS a silent partnership. And speaking of partnerships, did you know that A in IRA doesn't even stand for account? Most people think it's an individual retirement account, but the IRS calls it an individual retirement arrangement. It's just another partnership, another agreement, another structure where the IRS has a seat at the table. And I'll break that down in a future episode. But with these types of accounts, you're letting the government decide your tax rate. And then at age 73, you're forced to take money out whether you need it or not. You know what? That's called required. That's called an RMD, required minimum distribution. Required means required. And let's not forget, with Secure 2.0, that RMD age rises to 75 in 2033. And remember, in the previous episode, I told you that might look good on the surface, but what that really means is bigger balances being taxed later at higher tax rates, okay? I'm not the only one saying this, right? Let me show you a message that I got from someone who worked in government for almost 30 years. I'm not showing their name, but look at what they sent to me, right? And this is what it says. Tell people to pack away more in Roth, because we were always told pre-tax, 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 and that's not true. Your income won't be less in retirement. So you see, that's someone who lived it, someone who retired, someone who saw the tax bill on the other side. And she's confirming exactly what I'm teaching you. Your taxes don't magically drop in retirement, and relying on pre-tax accounts is a trap. So let's talk about how your money is taxed. There are 3 ways your money can be taxed. Tax now, tax later, tax never. Most Americans are stuck in one bucket, tax later. The wealthy, they spread their money across all 3, and that's how they control their taxes instead of being controlled by taxes. And we'll break these buckets down in the next episode, but I want you to see the difference here. Here's the real difference. The wealthy don't build retirement around an account. They build it around control. So they want control over timing, control over risk, control over income, okay? And a 401k doesn't give you control. It gives the IRS control. That's why the wealthy don't rely on it. Not because they're rich, but because they understand the consequences and the tax ramifications. They understand that retirement isn't about a balance. It's about access, flexibility, and a tax strategy. And here's the part most people never learn. The wealthy position money in places where they can't lose to the market, where they can't be forced into withdrawals, and where their income can be structured to be tax-free. They use strategies that give them a 0% floor, upside growth, no losses, and tax-free access in retirement. They don't wait for the IRS to tell them what their tax bill will be. They build a plan where taxes don't control their future, a plan that can be built for you also. Now, let me tell you something that surprises people every time I say it, right? The wealthy uses insurance as a financial tool. Not the kind of insurance you're thinking about, right? Not just in case something happens, not bury me when I die type of insurance. No, I'm talking about cash value life insurance. I'm talking about annuities, even corporate owned life insurance, right? Tools that sit on the balance sheet, not in a filing cabinet. Why do they use them? Because these tools create things the stock market and the 401k never will. Tax-free growth, tax-free income, creditor protection, okay, estate efficiency, market buffering, no forced withdrawals, no losses when the market drops, right? These are not insurance policies to the wealthy only. They are financial instruments accessible to everyone. They are part of a strategy, a system, a structure. And when they're designed correctly, the strategy, they give you the one thing the 401k will never give you. And that's control over your taxes, your income, and your future. And here's something else the wealthy do differently. They don't carry risk. They transfer it. They transfer market risk. They transfer sequence of return risk. They transfer longevity risk to who? The insurance companies. Okay, to institutions. These are structures designed to absorb risk so they don't have to, so you don't have to. They keep the upside, but they don't let any one risk destroy them. Okay? And here's the part that really separate wealthy families from everyone else. They don't live off assets. We're like, wait, cash is an asset, Mai. Yes, it is. But they live off the cash flow. When you live off assets, you're draining your future. When you live off cash flow, your future stays intact. That's why dynasties exist. That's how generational wealth is created. Their assets stay in place while income continues to flow. So most people were taught this cycle. Save, invest, hope the market doesn't crash, okay? Withdraw your money and pray it lasts. Bad. But the wealthy families, they follow a completely different structure. They build, they own, they protect, they distribute, they never deplete. Same markets, same economy, but different structure. And that structure is what I'm going to share and teach with you and tell you why it matters to you, okay? Now, did you know most Americans have 80 to 100% of their retirement in the tax later bucket? That's not diversification. That's tax rate gambling. And nobody told them otherwise. But there is a way to reposition your future, and it starts with understanding the buckets, the tax buckets, right? Now, you understand how the wealthy think right now, right? Just explain that. And you understand the math behind their decisions. So the next episode is where we break down the 3 tax buckets clearly and simply. The tax now, the tax later, and the tax never bucket. I'm going to show you why most Americans are trapped in the worst one and how the wealthy avoid it. Okay? That's the tax. That's the tax later bucket. So make sure you subscribe, like, comment, share, and turn on notifications so you never miss a value add moment. Until next time, keep moving forward, one smart choice at a time. May the Lord bless you and keep you. And may the Lord shine his face upon you. Be blessed, but more importantly, be a blessing.